The SBI Energy Opportunities Fund is a thematic fund which offers you a chance to participate in the creation of India's ambitious energy landscape. Indian companies have established themselves in the oil and gas space, and now it's time to also welcome new energy, solar, wind and hydrogen into the mix, and extend this welcome to some allied sectors too. With me is Raj Gandhi, the fund manager of the SBI Energy Opportunities Fund, who will talk about the portfolio construction and his vision for the fund. Hi Raj, so let's talk, let's begin by talking about the universe for this fund, right? So what are the kind of sectors or themes that you'll be looking at?
Sure. So, within energy space, if you see, it's quite a diversified space that we have here. So, the entire oil value chain, upstream, refining, petchem, standalone refiners, lubricants, so that kind of space is available there. Then you have the gas value chain starting from gas production, then import LNG terminals, gas transmission, gas trading. So, that is the space available downstream CGD entities. So, that is the space available on the gas value chain. And then you have the power utility space. There you have transmission, coal, and plus you have downstream distribution and all. So, there is a fair bit of play even there. And then we also have new energy, which is kind of scratching the surface right now. But as you see, from 22% renewables, we are going to go to 68% renewables. So that is where you will see multifold growth going ahead. And what you will see, some of the companies which are seen as traditional energy companies will kind of themselves transition into new energy. Like if you see, NTPC has stated that by 2032, their green renewables capacity will be equal to thermal. So what we are seeing is the sort of existing companies transition out, and plus you will have much more pure plays into the system as and when the ecosystem matures there with PLI and so much of incentives. You will have pure plays coming in here as well. So that is a space which we see will emerge big over time. And then you have array of power ancillaries as well, which are a part of universe. Because the kind of investment which will be required in power, so across the value chain there will be significant amount of capex which will be required, and which is again a play available to us. We also have leeway of investing in overseas energy securities and ETFs, be it transition ETFs and all of that. So which we intend to use that as well. So there is that wide array of universe available here.
Okay, so it's very clearly not a sector fund. It focuses on the entire ecosystem, not just domestic, but even global, as and when the opportunity presents itself.
Yes.
So how do you look to begin constructing this portfolio? Do you have a vision in mind?
So per se here, in terms of the sub themes that you want to play within that will be more top down in terms of identifying which themes and all. But then within that, it will be much more bottom up stock picking that you will do. So it will be a mix of top down and bottom up predominantly is how we would intend to run this.
And is there a number you have in mind in terms of how many stocks you're looking to buy?
So
or does that matter?
It depends on the liquidity aspect as well. So you'll want to leave some leeway there. But typically ideal size would be about 20 to 25 stocks in the portfolio.
And what is the benchmark?
So the benchmark is Nifty Energy Total Return Index, which if you see 1 year, 5 year, 10 year, or since inception across time horizon, it has outperformed Nifty in short and long duration.
Raj, when we think of the energy theme, there are all these PSUs that come to mind, right? So naturally, an investor would want to know that, is this a fund which will be dominated by PSU stocks?
So per se, the benchmark has about 55% PSUs as a benchmark weight. And from a portfolio construction perspective, I think that will not be a very predominant factor running on my mind, that is it becoming too heavy or too light on the PSU. It will be on an independent merit, so to say. So, within sectors you will find, in fact, being a PSU is beneficial. Like when we saw coal mine bin auction, all the PSUs were given coal block on a nomination basis. So, there are situations where you see PSU being at an advantage, and there are certain segments. So, it will be more bottom up and nuanced rather than just having some top-down view in terms of what should be the
Right. So
way.
there are no tick marks for you to
Yeah.
follow. Okay.
Yeah.
Are you looking at, or will you be able to buy commodities in this fund?
So here we can't buy the thematic fund as approved, or the way how the construct for thematic fund is, you can't buy pure commodities exposure here. But what you can do is domestic ETFs, fund commodity ETFs or funds
Okay.
predominantly having commodities as underlying, that can be bought here. So yeah, so typically we would want it as open as possible here. So as Warren Buffett says it, we read a lot about his individual stock and sector picking and all, but one of the key fact which he says is that increase your circle of competence, which is try and not stick to a particular style, or he kept on talking tech I don't understand, and then you suddenly had Apple as a most heavyweight of his portfolio. So I think the lesser talked about part is increasing the circle of competence so that you are not married to a particular style or a particular very small sort of a way of or a methodology.
Right. So be nimble-footed, be agile,
Yeah,
and
yeah,
be open
that's what
to
we hope to
ideas.
do. So I
Okay.
also do yoga for that. Hopefully it helps.
Well, so do I. Okay. So we've also read the presentation which says that you'll be following a barbell approach, right?
Right.
Now, what exactly, I mean, for investors and
Sure.
people like us who are
Sure.
lesser nuanced in the
Sure,
investing
sure.
language, what exactly is a barbell approach and how will you implement it?
So essentially, there are times when you feel that very, divergent kind of opinions or views, can kind of coexist in a portfolio and give you a much better risk-adjusted return.
Okay.
So in terms of energy fund, in that context, we think we are in a sweet spot wherein you can make money on the traditional energy side as well as on the new energy side. So on the traditional energy side, what we are seeing is that it was seen as a terminal value risk kind of a sector there. But what we've seen is that with the policy impetus and external environment in terms of crude being stable versus its own past history, it's given us a conducive environment to kind of see that the policy driven initiatives plus under investment in a lot of these traditional energy segments, like we've ran into thermal power shortage, refining globally is in shortage, and also this traditional energy companies are seeing the profit pool go up, and there is much more predictability coming to the earnings here. So there is money to be made on the traditional energy side. These same traditional energy companies are the ones which have maximum profit pool available. So like NTPC has mentioned publicly that by 2032 their renewable portfolio will be equal to thermal portfolio. So the second leg of value enhancement will come when the same traditional energy money is being put to use to scale up on the new energy business. And it will happen across India. Will emerge as the least cost hydrogen producer, and let's say something like refining, which is seen as traditional space, you need 3 to 4% of the output as hydrogen. With cheapest available hydrogen, they will move up the cost curve and improvise on the cost positioning there. So a lot of this traditional energy business as we are seeing them will kind of transition out. So it's a shade of gray even in the traditional energy space how we are positioned here. And on the new energy side, India has a distinct advantage wherein we have the trilogy of solar, wind, and hydro available here. And at a lot of locations, our onshore wind gives a PLF of offshore wind, and also it's kind of amazing the kind of excitement everywhere, even when you meet investors outside, the kind of excitement on the space there. So we will see the profit pool emerging there as well. Today, what is happening is on the primary energy consumption, oil 85% we are import dependent, gas 50% import dependence. We are selling coal at, most of the coal, India's coal is getting sold at 80% discount to global prices. So the profit pool capture itself is not there. With new energy, what we will see is that there will be much more energy self-sufficiency. So it's the biggest make in India or, Atmanirbhar Bharat story which will come out. And what has happened is now with this, the recent Russia-Ukraine war and all, we've seen that, this can be a very political tool as well, wherein Russia suddenly stopped gas supplies. So I think energy security is the biggest thing on the policymakers' mind now. So we will see that space emerge. There is a lot of impetus on PLI and all of that, which will see the entire value chain being coming up here. So the profit pool of the segment will kind of grow significantly, and as and when the space matures and grows, we will participate in that as well. So barbell approach essentially is, we think there is money to be made in both the strategies, and combining them will reduce the risk return profile. And
all right, Raj, sounds good. Thank you very much
Perfect.
for explaining this to us, and all the very best.
Thank you. Thank you.
Mutual fund investments are subject to market risks. Read all scheme-related documents carefully.